Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today is a new guest to the program. His name is Justin Smyth, publisher of The Next Big Trade. That's a YouTube channel, and you can also check it out on his website, nextbigtrade.com. Justin, welcome to the program.
Thanks a lot for having me today.
Yeah, a bit of background. You're an independent trader, self-taught, background in software development. You focus your attention on what's called stage analysis, which we're going to dive into today and apply it to our favorite sector here at Palisade Radio these days, which is uranium, of course. You put a video out called Lessons Learned from the Last Major Uranium Bull Market. I watched it, and it just made so much sense. And so I want to start there and have you tell our audience about stage analysis, but practically speaking, and applied to the uranium sector today.
So stage analysis is basically a trend following system, and it uses the 30-week moving average as kind of the basis for the system. And what you're looking for is a break above the 30-week moving average to determine whether you're in a bull market or not. So when uranium started forming a basing formation in 2016, it kind of just traded sideways for the entire year. At the end of 2016, it broke above the 30-week moving average, and the volume increase was massive. And another component to stage analysis is looking for a massive increase in volume once you get the breakout above the moving average. And this occurs off of the stage one base. So a base is basically a sideways movement in a stock or index for a period of time. So if you're looking at the uranium ETF URA, you can see on the chart that at the end of 2016, it broke above the moving average and the volume increase was substantial. It was more than 3 or 4 times average volume. And that's really what caught my attention and signaled to me that I should start paying attention to this sector. And that's what initially caused me to start making some videos on YouTube about the uranium sector. And then I've been doing that ever since over the last 3 months.
Yeah, and there's not too many people out there putting up content on uranium, but I think you've probably noticed just how many views that you get and how much interest there is in the sector when you put something out about uranium. I want to focus a little bit on, you talk about the concept of people having trouble trading a bull market and how difficult it is. I've had a lot of emails coming in the last couple weeks since this correction has taken place saying, is the uranium bull market over, or is now a good time to start buying? So talk a little bit about the mechanics of that first big move that you usually have in a bull market and then that last big move and what happens in between.
Yeah, so bear market or bull markets, a lot of times they're composed of those two big moves. The initial move in the bull market is a huge move because it's off of the bear market bottom. Basically, a bear market causes almost everyone to be flushed out of the sector. And once the bull market starts, there's very few sellers to compete with buyers. So buyers start pushing the market higher, and that's when you usually see that massive increase in volume because there's a lot more interest in the sector once the bull market kicks off. So usually you're coming off of a deep bottom. There's like all kinds of different players involved, like value investors, momentum investors get interested. What they call the smart money, like investment banks might start getting interested in the sector and deploying funds because they know that getting in early is what you want to do in a bull market. So a lot of times in these depressed sectors, you get these massive gains early. And then late in the bull market is when really like the public and the media get involved and they start talking about how people have made money in the sector for maybe a period of years. And you might even see like acquaintances of yourself, like your friends or neighbors, might actually have read something about the market in the media, and then they get interested, and then it's really kind of like a greed phase. Like a lot of times you see a massive up leg at the end of a bull market, and that's actually the most dangerous time really to get involved in a bull market is after it's been going on for a long period of time. And then eventually all bull markets end and you get kind of like a topping phase. It's called stage 3 and stage analysis. And then finally a bear market phase after the bull market is over.
Justin, these uranium stocks bottomed around the beginning of November, and based on stage analysis, you're saying sometime in December you confirmed that this was a bull market. Now that we've had this pretty big move, but it has only been a few months, and these stocks are still historically quite cheap. Are we still in phase one, or what's this pullback that's been happening the last few weeks? And is that something that might continue for a while longer?
Well, actually, I just did a recent video on this recent pullback in uranium, and if you read the book Secrets for Profiting in Bull Markets by Stan Weinstein, where I learned about the stage analysis system, the first big pullback is actually called the second ideal buy point. What it provides is like a second good entry point to get into a bull market, because it's kind of retesting the breakout point, and from there a bull market will proceed higher and start making higher highs. So, but it's a good low risk buy point, because if the bull market does fail, you can set your stops below the breakout level and not have too much damage in case the bull market does end and it was kind of a fake rally. But so far in uranium, we're seeing all these stocks are still trending above the 30-week moving average. So another cool thing about stage analysis is it gives you a framework to understand if we're still in a bull market or if things are breaking down into a bear market. So as long as all these stocks are above the 30-week moving average, then everything's fine. And what you want to do is just follow along and hold your positions and really enjoy the gains that you achieve, as the bull market progresses. So that's what's cool about the system, is it just gives you a nice reference point and a nice place to exit the market in case things do turn sour, so you don't take big losses if it morphs into something more serious.
The system's clearly technically driven from what you're describing, but do you take into account fundamentals when analyzing sectors and stocks based on stage analysis? Uranium has a lot of great fundamentals in place, and that probably drove a lot of the deep contrarian investors to soak up stock at the bottom, and they might have been some of the initial buyers into the first leg of this bull market. Do you have to look at fundamentals, or is it irrelevant with stage analysis?
I definitely look at the fundamentals a little bit when I pick stocks, because I don't want to choose stocks that have a lot of debt or have some kind of problem that could, cause the stock to not be in a bull market with the rest of the stocks in the sector. Besides that, I don't really dive too deep into the fundamentals, because I want to use my trend following system and basically the simple signals it provides to know whether I should be in the market or not. So my goal really with my trading is to make it as simple as possible. I think the more complicated you make it, the more you have trouble making a sell decision when you need to get out of the market, because you might try to convince yourself that it's not time to get out. So if I make it a simple trend following system, I know that I can stay in the uranium market as long as it's trending above the 30-week moving average. But like I said, I will look at fundamentals on specific stocks just to kind of make sure that what I'm getting into is not something's wrong with it. What I also look at is I want to see stocks across the sector all acting the same way. So in the uranium stocks, you'll notice that almost all of them are above the 30-week moving average, and all of them are taking good volume. So that's a really good sign that investors across the board are snapping up these stocks. When you see something like only one or two stocks in a sector break out and the rest of them just go sideways or stay in a bear market, that's a warning sign that maybe only the fundamentals for those specific stocks are improving and not the rest of the sector. So when I saw not only some of the better uranium stocks breaking out, but almost all of the uranium stocks breaking out on big volume, that was a flashing sign for me that this is a sector that I want to be involved in.
You've been studying stage analysis and implementing it for a few years now. When has stage analysis worked, and has it ever failed for you? So just past examples maybe of sectors starting to move when you implemented it.
So basically, a trend following system has the most trouble when a market's in a sideways chopping kind of pattern. Because what happens is you keep getting signals to get in, but then the trend never unfolds, and then you have to get back out, and maybe you get chopped up and you take small losses. So that's where you'll see trend followers lose money, but they're never going to lose a lot of money. They're just going to lose small amounts a lot of times. I guess one example from last year is actually the gold market. I did a lot of videos on the gold market last year. You can go back and watch them on my YouTube channel. And gold broke out in early 2016 and had a massive up leg. And late in 2016, it actually started to break down and went below the 30-week moving average. So I was forced to exit my gold stock positions. And recently, gold's been kind of just chopping along the 30-week moving average. And actually, what happened this week was interesting because there was a big reversal on heavy volume in the gold stocks after the Federal Reserve. So, the gold stocks are right at that moving average level, and I'm going to be watching them over the next few weeks to months to see if a new up leg gets started again. But that would be an example. You never know when these bull markets are going to end or morph into, a temporary bear market or something. So if you just keep following the signals, I think you're going to keep yourself safe. And really what you're avoiding is the massive down legs that cause massive losses to your portfolio. And those are the hardest things to recover from.
So on the one hand, you're avoiding those massive downside plays, but playing devil's advocate here, the downside of the technical analysis route is you have to wait for a bit of momentum to pick up in the space before you're going to enter, hence you're missing the first part of a move, and then before selling or before exiting your position, you're usually doing that on the backside of some weakness. So there's a little bit potentially less upside to prevent from the downside. Is that right?
Yeah, that's correct. You're never going to catch the bottom in stage analysis or any trend following system. But bull markets, especially the good ones, will progress over a period of years. So you don't really need to catch the bottom. And by avoiding the bottom, you avoid getting yourself involved in, a bear market that's ending while there's bull markets in other sectors. So one thing that trend followers do is they observe markets across all sectors, and they can, move themselves into a sector that's starting to emerge, and try to stay focused on these sectors that are in bull markets. One thing that I do, though, when you're in a bull market and the market gets extended above the 30-week moving average, I like to take partial profits and put cash back into my portfolio. What that does is two things. It minimizes my risk when the market eventually pulls back, and it also gives me cash in my portfolio to deploy into other things. So the trade-off is if I don't pick the top, obviously I'm losing out on further gains. But I think it's nice to have the cash in your portfolio and to prudently take profits in the market, to, like I said, to minimize your risk. And you want to retain a core position, though, because the big money in the markets is made by holding these longer term trends.
Fair enough. I want to ask you, in terms of this uranium rally that started back in November, how strong was it? It felt very strong for me. Participating in those stocks, there was a couple 100% movement in a few of them. But compared to other stage one beginnings of bull markets, was this really strong or was it pretty normal?
It looked exactly like a stage two breakout. It had. I'm looking at URA right now, and it started doing 2 times average volume, and then it went up to like 6 times average volume in one of the weeks that it went up. And that's a massive increase in volume. Like in the system, they say to look for 2 times average volume for the week or higher. So when you start seeing like multiples of that, that's when you know that big money is getting back into the sector. And like you said, you see like those massive gains when the sector moves back into the bull market because it's so depressed. And people that are smart on markets know that bear markets don't last forever. So when you can get involved in these things when they start their bull markets, there's just nobody left to sell, and they start going up rapidly. So that's what happened with uranium. And you can look at what I'm planning on doing actually over time is looking at a lot of past bull markets and building a collection of stuff I can look at. And you see the same thing over and over. It's these big increases in volume off of these bases, and then the bull market gets kicked off.
All right. Well, final question for you, Justin. What else are you looking at? You did mention gold, and we've been talking about uranium. Are there any other sectors that are cheap that you've got your eye on potentially bottoming out and entering into a bull?
I'm definitely looking at gold. Other commodity sectors, obviously, we had that massive bear market in commodities from 2011 all the way up until last year. Some of the agricultural commodities have been bottoming for a long period of time. I looked at the solar sector recently. It's gone through a big bear market and was kind of basing out, but really hasn't broken out yet. I'm actually looking at a lot of biotech stocks right now because they went through a big bear market in, I think it was 2014 and 15, and then started basing out last year and then broke out actually earlier this year. If you look like that, like the IBB ETF or the XBI. So I'm definitely looking at a lot of biotech stocks and like I said, commodity stocks too.
Well, for listeners who want to find out some more information, Justin, your YouTube page is Next Big Trade with no spaces in between. You've also got nextbigtrade.com, and then I understand you're working on potentially releasing a screening tool at some point in the future. Do you want to talk about that?
Yeah, actually, that screening tool is out there. That's at screener.nextbigtrade.com. So that I'm actually a software developer, and that tool I've developed uses the stage analysis system. So if you want to get involved with stage analysis and start using the trend following system, that's what I've developed that tool for, and I use it myself. So I'm continuing to add features to it, and if anyone wants to see a new feature, definitely send me a message on Twitter or send me an email. And but yeah, I'm doing multiple things. I'm working on more content for my site, and I'm working on that screening tool.
Fantastic. Justin, thank you so much for coming on the program, and look forward to getting you back on.
Awesome. I appreciate the opportunity to be on this show, and you've done a lot of good interviews in the past, so keep up the good work yourself.
Great. Thanks so much.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen? Or are you too stupid?